Scalping or position trading. What is better? Hi guys, my name is Emma and welcome on my YouTube channel. Have you ever wondered which trading strategy, scalping or position trading, is right for you? Some traders can sit for hours tracking every small price fluctuation on the chart. Others, however, open positions and hold them for days, weeks, or even months. But which is better? Which strategy will give you consistent profits and maximum comfort in trading? Let's break it down, as your choice may affect not only your number of successful trades, but also your emotional state, which means long-term success. If you are looking for proven setups for daily trading, analysis, and tools to improve your approach, subscribe to my TG channel. You will find everything there, from up-to-date indicator reviews to strategies that can help you profit in any market. Let's talk about definition and philosophy of the strategies. Scalping is a strategy focused on short-term trades, often last from few seconds to minutes. The main goal of scalping is to profit from small price movements. Scalpers can make dozens or even hundreds of trades in a single day, with each trade earning only a small profit. On the other hand, position trading takes a more long-term approach. Traders use this strategy may hold position for several days to months, targeting more substantial price changes. The focus here is on fundamental analysis, macroeconomic trends, and global market conditions. Another thing which is important to talk about is time and workload intensity. Let's break down the difference here. Scalping. For scalpers who are constantly monitoring the market, especially during periods of high volatility, very intense. The trader's time is packed, as every price movement requires immediate action. The potential for high profits during the volatile market is a plus, but the downside is a constant involvement and high levels of stress. Position traders have more time for analysis and decision-making. They don't need to sit in front of the screen all day. It's a more relaxed approach that doesn't demand immediate reactions to every market movement. However, thorough analysis and patience are critical, since the market might take time to move into desired direction. Well, let's move on to the risks. Scalpers face higher risks associated with short-term market moves. Even the smallest market shifts or slippage can impact the result of the trade. The high frequency of trades also increases costs related to commissions. In a position trading, the risks come from the potential for significant market corrections. Position traders may seek through losses for a long time if the market turns against them. However, they count on long-term moves and use stop losses levels to protect their positions. Well, I think it's time to discuss the psychological aspects. Scalping requires traders to have nerves of steel and the ability to make quick decisions. The fast pace of trading can be stressful, leading to emotional strain and fast mistakes. In the position trading, patience and the ability to stay calm despite temporary drawdowns are crucial. Position traders must be ready for their trades to stay in the red for quite some time before seeing a profit. This strategy requires endurance and confidence in their analysis. Now, I want to discuss the capital deposit requirements for both strategies. To successfully scalp, you need a large enough deposit to cover up the potential losses and commission. Ideally, scalping works best with low spreads and brokers with minimal fees. Position trading can be done with more modest means, as the focus is on the larger price movements. However, it is still essential to have enough capital to withstand the market fluctuations and the drawdowns. But what about the tools and indicators? In scalping, traders use technical indicators such as moving averages, Bollinger Bands, oscillators, for example, RSI and stochastic, and volumes to find short-term entry points. Support and resistance levels are also key in identifying potential price reversal. In the position trading, traders primarily rely on fundamental analysis and larger market factors. However, technical analysis also plays a role, especially when determining long-term support and resistance levels. But you want to ask me, who wins? Well, scalping attracts traders willing to take risks for quick profits. Those with fast reactions, emotional control, and experience working in high volatility environments can definitely succeed here. Position trading is ideal for those who are willing to wait and build long-term strategies. It's a more peaceful style of trading, allowing you to avoid daily trading grind. Guys, if you want to deepen your knowledge in either of these strategies, sign up to my Telegram channel, where I share setups, analysis, and trading tools to help you succeed in any market. Both scalping and position trading have their pros and cons. It all depends on your personal trading style, your tolerance for risk, and the time you can devote to the markets. Scalping may offer quicker rewards, but they come with a higher stress and the need for constant attention. Positional trading, on the other hand, requires more patience, but can provide long-term gains with less day-to-day pressure. In the end, the right strategy for you is the one that best aligns with your personality, trading goals, and lifestyle. Whichever you choose, remember, consistency, discipline, and proper risk management are the key to long-term success in trading. Thank you so much for watching. I can't wait to see you back here on my channel really soon. Bye!